You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 10th day of July, 2023. This will be a bit of a noisy broadcast because, as most of you know, my AC unit went out and I have a floor model trying to keep the room cool enough so that we can actually do this broadcast today. So I'll try to speak up and hopefully the background noise won't be too terrible. And when Michael's on, well, you won't hear it at all. So we do 2 live broadcasts every trading day. First live broadcast is from 9:30 a.m. to 11:30 a.m. Eastern. That is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you've never taken your 1-week free trial, go to mytradingiq.com, and at the top of the page, there's a button that says free 5-day trial. Now, there's no fine print. Free really means free. There's no credit card required. They don't need your mother's maiden name or any of that. You simply need a desire to learn how to trade. You need to be willing to show up every day and do the work, understand what's being taught, so that at the end of the free trial, you can make a well-informed and intelligent decision if the business of trading is right for you and if what we do is right for you. When the live broadcast ends for the live training room, we take a 30-minute break from 11:30 a.m. Eastern to 12 noon Eastern, and then we begin this broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast. The best way, go to mytradingiq.com, scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and you're done. Going forward, every trading day, you'll get an email an hour before this broadcast starts. In the email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. Now, I think that's the better way because it gives you access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days that you're out of the office, away from your desktop, but you still want to join the afternoon broadcast live. There will also be days when you're just busy and you can't join live, but you'd still like to see and hear what we discussed. The solution to both situations is quite simple. It's called our YouTube channel. That's youtube.com/CFRN. You already know youtube.com, so really, all you got to remember is the /CFRN. Not only do we broadcast live every trading day, as we're doing right now on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,200 daily episodes archived for your educational and viewing pleasure. And for those who are new to the world of CFRN, a great way to get to know who we really are. Not just today, not just this week, but over the years. Thanks to YouTube, you can do that. You can go to our YouTube page, our YouTube channel, scroll back 6 weeks, 6 months, a year, 2 years, even more, and just pick some days at random. And you don't have to listen to the whole broadcast, but do fast forward to the part where Michael does the recap of the live training room, where I do the recap of the alerts, and pretty quickly, you'll see the thread of connectivity and the thread of continuity that's woven through each and every daily broadcast. So, with that said, with a word of prayer, as we do every day. Now, our topic of discussion for almost the last week has been habits. We all have them, some good, some bad. Now, while we're talking about habits, habits is also an acronym, and I'll explain that in a moment. Our scripture for today, 1 Corinthians 10:13, and I'll be sharing with you from the Message translation. No test or temptation that comes your way is beyond the course of what others have had to face. All you need to remember is that God will never let you down. He'll never let you be pushed past your limit. He'll always be there to help you come through it. Again, 1 Corinthians 10:13. Have you started to dig into discovering a healthy identity? Remember, I said habits is not just habits, but it's also an acronym in this case. The H stands for healthy identity. That's what we discussed on day 1. Did you come up with some identity-based goals and identity-healing truth from God's Word? Have you found the right people to ask for help? That's the A in habits, ask for help. Maybe you realized that this isn't so easy and you've slipped up with your new habits. But you remembered to be kind to yourself. That's the B in habits. So what's the next letter? I. Investigate and make changes. What does investigating and making changes have to do with anything? Charles Duhigg, who wrote The Power of Habit, made famous the idea of the habit loop. The habit loop consists of cue, routine, and reward. If your habit is overeating before bed, the loop might go like this. Cue. You sit down with your spouse or friends to watch a show, and you see a commercial with food. Routine. You go check the fridge and find something tasty. Reward. Your body releases positive chemicals as you eat the food and enjoy your company. The result is a self-perpetuating habit. When we're breaking an old habit or making a new one, we'll likely run into some serious struggle along the way. Sometimes that struggle has to do with the habit loop. If you're the person who's breaking the habit of overeating before bed, you'll want to make sure you've discovered what the cue or trigger really is. Maybe it's the food commercial, but just the act of watching a show, getting together with friends, or any other number of things can trigger you. You'll also want to think about your routine. Do you just check the fridge because you're bored, because it's part of your ritual, or because you're truly hungry? The reward is vital. Is it the food, or is it the act of sharing food with company that you enjoy? Maybe you're just nervous when certain people are over, or maybe you eat and watch shows to avoid conversations you need to have with your spouse. When we feel like we just can't break out of the habit loop, let's stop, investigate, and then make changes. Also, let's wield the habit loop for making good habits as we develop positive cues or triggers, healthy routines, and right rewards. Here's the thing about making or breaking the habit loop that most books won't tell you. There is always a way. How do we know this? We just talked about it in 1 Corinthians 10:13. The Apostle Paul tells us that God is faithful. He will not let us be tempted beyond what we can bear. But when we are tempted, He will also provide a way out so that we can endure it. So let's investigate, make changes, rely on God, ask people for help, and keep taking the next step as He guides us forward. Things to consider. What are my triggers? How can I replace negative triggers with positive triggers? Where are my routines leading me? What are the rewards of my habit? And finally, are they what God has for me? Join me in a word of prayer. Heavenly Father, we come before you humbly, seeking your guidance and strength in the face of temptation. Your word reminds us in 1 Corinthians that no temptation has overtaken us except what is common to mankind. We are grateful for this reassurance that you understand our struggles and provide a way out. Lord, we acknowledge that we are weak on our own, but in you we find our refuge and strength. Grant us the wisdom to discern the paths that lead away from you and into temptation. Help us, God, to resist the allure of sin and the deceptive schemes of the enemy. In moments of weakness, we pray that you would remind us that you are faithful. You will not allow us to be tempted beyond what we can bear. But with the temptation, you will also provide a way of escape. Strengthen our resolve to follow your path and choose obedience over momentary pleasure. We ask that you would fill our hearts with your Holy Spirit, Lord, that we may be empowered to overcome the temptations that surround us. Give us discernment to recognize the traps set before us and the courage to turn away from them. Lead us in the ways of righteousness and keep us on the narrow path that leads to eternal life. Heavenly Father, we thank you for your unconditional love and grace. Thank you for being our ever-present help in times of temptation. May your word be a lamp to our feet and a light to our path. guiding us away from sin and into a deeper relationship with you. We pray all these things in the name of Jesus. And everybody said, Amen. Amen. Okay, if you're tuned in via the YouTube channel, you already know the title of today's episode. How does the threat of war impact the markets? Well, let me give you the numbers from around the world, and then we will talk for a moment about that very topic. All right, we're going to start here. In the U.S., cash markets, the indices, and they're split. So be careful out there. The Dow's up 113 points. The NASDAQ is down 61. S&P 500 is down 5, but the Russell 2000 is up 21. Now for the Russell, that's a gain of well over 1%, almost 1.25%. In the commodity basket, crude oil down 3 cents, trading 73.81 last. Gold down $3.60, trading 19.2890 last. Silver down a penny, trading 23.27 last. In the Asian markets at the close, Nikkei down 198 points, Shanghai up 7, Hang Seng up 114. Now, that breaks a streak for the Asian markets. In fact, it was a mixed day in Asia, with the Nikkei being the only one in the red. It was a green day across the board for the UK. Not a big green day, but green nonetheless. And as I mentioned, it is a mixed Radio Monday here in the US of A. Now, as futures traders, we really don't care if they're all red or all green. We just like to see them all the same color. Because when the four major indices, the S&P, the Dow, the Russell, and the NQ, are all moving in the same direction, that's when you have better follow-through. Okay, better outcomes to your high probability, low risk trade opportunities. But again, we're divided with the Dow in the green by a little, 128 points, which is not a lot for the Dow. The Russell, on the other hand, is deep in the green, up over 1%. The NASDAQ and the S&P, they're in the red. And based on the volatility of the NQ, not a lot. And the S&P, it's only down 3 points. So there we go. Now, how does the threat of war impact the markets? I'm sure you know that while there has not been any declaration of war against the U.S., there have been threats that are perhaps more than what you might call a vague threat. The threat of war can have significant impacts on the financial markets. It introduces uncertainty, alters investor sentiment, and disrupts economic stability. Here are some key ways in which the threat of war can impact the markets. Number one, investor sentiment and market volatility. The mere possibility of war can create uncertainty and fear among investors. Heightened geopolitical tensions and the potential for armed conflict can lead to increased market volatility as investors re-evaluate their risk appetite and adjust their investment strategies. Stock markets may experience significant fluctuations with increased buying or selling pressure depending on market participants' perceptions of the risks involved. Now, again, as futures traders, which trade around the clock, there's an hour break every day from 5 p.m. to 6 p.m. Eastern, Monday through Thursday. The Globex markets open Sunday night and are basically open until Friday afternoon at 5 p.m. Eastern, except for that 1 hour break each day. Like right now, we're in the Monday session, but it began last night at 6 p.m. Well, today at 5 p.m. Eastern, futures will stop trading, but at 6 p.m. Eastern tonight, the markets will reopen, and that is the beginning of the Tuesday session, even though it's still Monday night here in the U.S. Now, volatility is good for futures traders. Like I said, whether the market's going up or down, we can trade in either direction. That's just one of the many reasons we like futures. But a market that is flatlining, that spells trouble. That's where so many traders lose what they've earned in a short period of time, is because they get caught up in a very tightly range-bound market and don't have the understanding that they should just stay out of that market until price breaks out of the range. Now, back to how war can impact, or the threat of war even, can impact the markets. You've all heard the term flight to safety. During times of heightened geopolitical tensions and the threat of war, investors often seek safer investments as a way to preserve capital. This flight to safe haven investments such as gold, government bonds, or currencies perceived as less vulnerable can lead to price increases in those assets. Conversely, riskier investments such as stocks in sectors directly impacted by the conflict may experience declines. Number 3, the threat of war can disrupt global trade and supply chains, leading to economic consequences. Trade tensions, the imposition of tariffs, or disruptions in shipping routes can negatively affect business and industries reliant on international trade. Companies with significant exposure to regions under threat, or those involved in defense and security sectors, may experience significant volatility in their stock prices. Number 4, commodities, especially those tied to energy and resources, can be significantly affected by the threat of war. Oil prices, for example, tend to be sensitive to geopolitical tensions, as conflicts can disrupt oil supply routes or impact major oil-producing regions. Prices of other key commodities, such as metals or agricultural products, may also experience volatility due to concerns about supply disruptions or changes in demand. 5, the threat of war can influence currency values and exchange rates. Safe haven currencies such as the US dollar, Japanese yen, or Swiss franc may strengthen as investors seek stable alternatives. Conversely, currencies associated with countries directly involved in the conflict or deemed to be at higher risk may face depreciation pressures. Exchange rates can fluctuate significantly as market participants adjust their currency positions based on the evolving geopolitical landscape. And number 6, governments often respond to the threat of war by implementing various measures to protect their economies and financial systems. These responses can include changes in fiscal policy, monetary policy adjustments, or increased regulation. Such policy shifts can have direct and indirect effects on the markets, including interest rate changes, changes in government spending, or alterations in trade agreements. It's important to note that the impact of the threat of war on the markets can vary depending on the specific circumstances, scale, and duration of the conflict. Market reactions can also be influenced by factors such as diplomatic efforts, peace negotiations, or international interventions. Additionally, investor sentiment and market dynamics can change rapidly based on the evolving geopolitical situations and, of course, news developments. Traders and investors should closely monitor these geopolitical events, assess potential risks, and stay informed about the latest news to make well-informed trading and investment decisions during periods of increased geopolitical tensions and the threat of war. So there you have it. Now, Valerie sent me the recap, so let me grab it real quick, format it from my screen, and that's where we'll head next. Michael will be joining us in about 15 minutes. He'll give us a recap of what happened in the live training room this morning. Then we'll trade live for 30 minutes on the TradingView platform. And then I will complete the recap, whatever I haven't gotten to as of yet. And also, when we finish trading on the TradingView platform, we'll announce our winner of the day for our tweet of the day. Our tweet of the day winner. Maybe that's a better way to say it. We're in week 258. And over the last 258 weeks, we've issued over 14,600 individual handcrafted alerts. Over those 258 weeks, we've averaged 20% or less of the alerts being stopped out. Now, since the markets opened last night at 6 p.m. Eastern, we issued a total of just 9 alerts. Still waiting on the outcome of 3. So we had 6 actionable alerts, of which 1 or 17% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a simple process that I teach all of our passport holders in their unlimited one-on-one mentoring sessions. So for those of you that have not upgraded yet to the passport, you should talk to Valerie. You can call her at 949-42-EMINI so that you'll have access to these numbers, to these alerts. Now, these logic alerts can come out around the clock, 2 a.m. or 2 p.m. Because, as I said, futures trade around the clock and we have traders around the globe. Our day session is their night session and vice versa. Over the last 258 weeks, we've averaged 20% or less of the alerts being stopped out. This week, we're sitting at 17%. Last week, we ended the week at 23%. Now, that might have changed had I been able to put out alerts on Friday, but with no AC in my office at about 110 degrees, it just wasn't possible. However, ending last week at 23% in no way endangers our 258-week average of 20% or less. We've had many weeks with 3%, 4%, 5%. The caveat is you never risk more on a trade than the potential profit. If it's an alert, you determine the potential profit by looking at the entry price and the final trade to price. Most alerts have multiple targets. Sometimes they don't, but more often than not, they do. Now, a potential profit in an alert could be $1,000, $2,000 per contract traded, but you still don't want to risk more than $300 per contract trade. Now, if your plan is to get out at the initial target, which is designed to give you your goal for the day, then that's all you should risk. Okay? Never, if your plan is to stay into the second target or the third target, you can risk up to $300, but no more. Okay? And if an alert only has $100 of potential profit, which would be the very minimum, or $200, then again, you don't risk more than the potential profit, whether it's an alert or a trade setup that you find on your own. And that's our goal, and that's the purpose of the alerts, is so that you learn how to look at a 30-minute chart and spot the windows of opportunity that the alerts represent. Now, the logic alerts, even though they're based on current price action, I intentionally build in time for you to get the alert so that you can study the 30-minute chart and then be prepared to take action when price reaches the entry point. The more times you repeat that process, get the alert, study the 30-minute chart, see the window of opportunity with your own eyes, pretty soon you'll be spotting the windows of opportunity before I even have a chance to post an alert. So please use the alerts as they're intended, a training tool. Okay? I know some people, just say, I'll just trade the alerts and I won't have to worry about learning how to trade. Huge mistake. You are in a golden period right now where you have the opportunity to actually learn how to trade. Not how to trade a specific market, but something far more valuable, how to trade. Once you understand that price flows the same across all markets and all time frames, you can trade anything, anywhere, anytime. All you need is a strong, robust, reliable internet connection. Now, along with the logic alerts, which come out around the clock, we also have the concierge trade alerts, which is our original alert service. Now, it's not an either-or proposition. The two work hand in hand. The CTAs are published shortly after the Globex open each evening. Last night, they got posted at 6:20. The markets opened for the week at 6 p.m. Eastern. 20 minutes later, every member and every trial member had these numbers. Now, since this broadcast is open to the public, you might want to grab a screenshot or jot down the numbers for whatever market you trade. Because before the broadcast ends today, we'll walk through each and every one of these markets to see exactly what happened and if the targets were reached. So, what do you do with this report if you're a member or a trial member? When this report is published, what do you do? It's simple. First thing is make note of where price is on your 30-minute chart of the markets you trade at this time. Okay? Whatever time. Some nights it'll be 6:30, some nights it might be 7:30, some nights it might be 6:05. But because you have Telegram installed, you'll be notified the second it's posted. Once you've made note on your 30-minute chart of where price is at this time, draw a line in the sand at the long target, a line in the sand at the short target. They will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, when we go to the charts, on my daily chart and on my 30-minute chart, you're going to see a green line. Okay? That's the BBC. It stands for Bull Bear Cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price drops below the green line, then we're bearish and we anticipate lower prices. So if price gets above the 30-minute BBC, it's trying to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. It's that simple. You still have to look left to spot potential obstacles, prior swing highs or swing lows that can become current support or resistance, and you learn over time how price behaves at a weekly trading zone. The weekly trading zones are issued for members and trial members at 6:15 a.m. Eastern every Monday morning. We've published the zones since December 14th, 2009. Only 3 things happen at a weekly zone. 70% of the time it's consolidation, 20% of the time it's rejection, and 10% of the time it's what we call the slice. Now, price is always trying to reach a weekly zone. From the moment the markets open Sunday night until they close Friday afternoon. If price is above the 30-minute BBC, it's not only trying to reach the long target, but it's also trying to reach the zone overhead. If price is below the 30-minute BBC, it's not only trying to reach the short target, but it's also trying to reach the zone below. Once you truly understand how price behaves at the weekly trading zones, they will become one of the most important tools in your trading toolbox. So, I know it sounds simple, but here's the hard part. You have to be able to resist the urge to make it more complicated than what I just explained. As long as you know which way the wind is blowing, it's pretty simple to reach your goal of the day. Now, Michael should be joining us here in about 5 minutes or so. So let's go ahead and jump over to the daily chart, where we have some interesting developments. Now, these are fib retracement levels. The most recent major swing low came in October 13th of last year. The most recent swing high came in on June 30th of this year. Price always reverts to the mean. And in our case, the mean is green and it's called the BBC, Bull Bear Cross. That's what it stands for. When price crosses below it, we're bearish, we anticipate lower prices. When price gets above it, we're bullish, we anticipate higher prices. Pull back to the BBC holds more often than it doesn't. I mean, just right here, you've got 1, 2, 3, 4, 5, 6, 7, and now 8. 8 pullbacks to the BBC that have so far held. When price hits the daily BBC or the 30-minute BBC, we expect it to be good support until proven otherwise. Now, we spiked it just a little bit, and I've already adjusted the fib extensions. Retracements show you where the market should find support as it heads down. This is the 24% retracement, the 38, 50, the 62. We also use Fibonacci price extensions. Same 13th century math, but applied in a different manner. So the retracements show areas where the market will potentially find support as it drops. The extensions show you where the market will potentially find resistance as it rallies. Okay, here's the 24, here's the 38, the 50, the 62. Whatever market you trade, you may not trade the S&P. I do, but I don't trade the daily chart, okay? But I go to the daily chart before I start trading because I want to see what the institutional traders are doing. Why? Because they're the ones who move price. Most major institutions have hundreds of millions, billions, even trillions of dollars under management. So when they place trades, price moves. Retail traders who have accounts in the thousands and tens of thousands of dollars, we provide liquidity. Doesn't mean we can't still be profitable, because we can. You see, our strategy and our indicators aren't designed to outsmart all of these really smart people, and our strategy and indicators aren't designed to beat the market. The market's our business partner. What our strategy does is it helps you see exactly what the institutions are up to, what the markets are up to, and you begin to understand why. And so all you have to do is to simply do what the market is doing long enough to get your goal for the day, and then put the mouse away. It's really that simple. Now, we had a bearish cross, or not a bearish cross, but the step line, which is the black line. When it crosses blue and climbing, that tells us that price is probably going to pull back to the BBC. And it did. And it gave us a very nice bounce. We actually put in a new high at 44.98. The previous high was 93.75. Then we consolidated for 1, 2, 3 days. Then we made another drop back to the BBC, and it held. And it bounced right up to blue and climbing in the step line. When either of those are directly above price, that represents potential resistance. So that would be resistance times 2. So when the markets opened last night, we got a drop, and we got a bounce, and here we sit. We're above, we've got support below us at the BBC and the low of the session, and resistance right overhead at the step line and blue and climbing, and the high of Friday, 44.75. So no matter what market you trade, or stock, or crypto, or forex pair, or ETF, you see, institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So the purpose of spending a couple of minutes with the daily chart of whatever it is you trade helps you see what institutions are up to. Are they painting a green candle? Are they painting a red candle? Is price trapped? Okay, if so, make note of those important numbers. Then go to your 30-minute chart, or based on last week's zones, because the new zones don't come out until Monday morning at 6:15 a.m. Eastern. So you're seeing last week's zones on my chart. Tomorrow you'll see this week's zones on my chart. Any alert issued today will be based on this week's zones, whereas the alerts last night were based on last week's zones. The vertical line that you see separates today, Monday, from Friday, from Thursday. When price rallies up to a zone, we expect resistance. When price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance. So we opened last night and we dropped to the short target, almost made it to the zone. The zone is 4408/4409, and looks like the swing low is about 4411.25. Yeah. Then we got above the BBC. There he is.
I'm here.
Okay, guys, we will complete the recap of all these other markets once Michael, he's going to give us a recap of what happened in the live training room. Then we'll trade 30 minutes live on the TradingView platform. And I'll come back and complete the recap of the alerts.
Okay. Let me just get the TradingView platform going right here.
Okay. Also, when I come back, we'll announce our tweet of the day.
Tweet of the day. All right. Community live streams. Oops. All right. Let me just bring the charts over here, and then I will get this going. Here we go.
All righty.
There it is. All right. We're ready to roll.
Good.
All right. Good afternoon, everyone. Today is Monday, the 10th day of July, 2023. Now, if you have not taken a free trial with us and you want to take a free trial with us, then go here to mytradingiq.com. On this page, all you have to do is click right here where it says sign up for your free 5-day training, 9:30 to 11:30 Eastern time. You click on that, we'll be sent all the information you need to get into the room in the morning. But if you're going to bother taking the trial, you should go here to trading platforms and get the trading platform running on your desktop in front of you. All right. Now, TradingView is what you're going to be seeing in the charts right now. That's this right here. Just watch that video. It's 3 minutes long. Give us your TradingView ID, username, whatever it is. Send that to us. And DT Pro is what I trade on. That's right here. If you want to install that, just watch the videos, do what it says, give us the information we need, and you'll get all set up. Now, do not let the trading platform be a stumbling block for you. All right. I can do that all for you in 5 minutes. So all you have to do is let us know if you're having trouble with it. Let us know. I'm not the only one who can do it. You know, there's 3 or 4 other people who can set it up for you in 5 or 10 minutes. So all you have to do is just let us know. Right? Do not let that be a stumbling block. Now, the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 10th day of July, 2023. Today we made 76 ticks on the NQ, 8 ticks in the Russell. Sorry, 8 ticks in the Russell. We lost 4 in gold, and we lost 10 on the ES. Put us at plus 255 in the morning session. Today it took 1 minute and 1 trade to get to $1,050, and we took a total of 17 trades this morning. So on the month now we're up $1,032. That's over 5 business days, averaging $206. Now we'll get that number up by the end of the month. It's pretty low right now. By the end of the month, that'll be more like last month, which was $400 and something. On the year, we're averaging $460 per day. All right, this month is just starting off a little slow. Speaking of the year, on the year, we've gotten our goal for the day on 126 out of 129 days. And so that puts us at $59,442 with 1 contract on the year. All right. Right over here is where you really want to be. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year, you've only had to work 38.25 hours, and you would have been averaging $1,747 for those hours, those 38 hours. That does not mean you're going to sit down and make $1,700 an hour. What it means is, like this month, for instance, I've worked 62 minutes so far. 62 minutes getting my goal for the day. And so far with 7 contracts, that puts us at $4,130. So that's an hour and $4,130. That's kind of what it means, right? Over time, it averages out to $1,747 an hour. All right, so let's get into the actual trades. We'll start out with gold over here and blow that up. All right, so we had on gold, let's see, we had just a couple of trades. The first trade was right here. We picked up 6 ticks in profit on that one. We missed the second trade opportunity right here. I might have just ignored it because I want a deeper pullback. We did take this third one out. It seems like I should have probably got my stop to break even, but it stopped me out to the tick and got a -10 on that. So that put us at -4 overall. And that was all the trading we did on gold this morning. Right in here, long-term duration was flat, so you're not going to take that. This right here would have given, it was at 10.52. I didn't take it, but it would have given enough to get the stop to break even. I might have missed that completely. And right here, I would have been looking for a higher swing, which we didn't get. So gold was kind of slow today. We might be getting pretty close to rolling gold. I'll have to check the volume on that. The Russell. Okay, we had a few trades here on the Russell today. And you see these pink areas right here. Those are no trading zones, right? In case you're curious why we have those big vertical pink areas. Let me bring that out and this out. Look here. Okay. So on the Russell, let's get back to the beginning of all this. Hold it. Get back to the beginning of all this. Here we are. Here we are. All right, so on the Russell, our first trade of the day on the Russell, just sure that is the very first trade. Our first trade of the day on the Russell was right here. We picked up 2 ticks on that one. All right, then the next trade was right here. We picked up 5 ticks on that to get us to plus, actually we picked up 12 ticks on that to get us to plus 17. Right, on this one right here, we picked up 12 ticks to get to plus 17. There were a whole lot of black arrows right here. They were really great trades that I ended up missing for whatever reason. And I took a break even on this one right here, this green arrow. I know I was looking for a lower swing before I traded again. That's why we didn't do that one or that one. This finally did give the lower swing, but I missed it for some reason. I think I was training at that point. A couple more nice green arrow trades right there, all during the training period. Then when I started up again, we were right here and I picked up 1 tick to get us to plus 18. Then I couldn't take the green arrow right here because we need to put in a lower swing first. But I did take this one and that gave us -10 ticks. Okay, -10 ticks. And so that put us at plus 8, which is where we ended on the morning session with the Russell, plus 8. All right, and we get in here, there was a trade there and a trade there. And this trade here and this trade here were both nice profitable trades, but we didn't put in a higher swing after this one, so we would not have taken that one right there. Came in here, we had really nothing there. And right in here, I would have been waiting for a deeper pullback. This green arrow right here is what I would have waited for. And it looks like it probably would have given just enough to get the stop to break even. Okay, this is on a 7 range on the Russell. But that was it during the break. We ended up with just plus 8 on the Russell today. Okay, and the ES, we owned a couple of trades there on the ES. And let's just look at that. Slide it all the way back here. All right, well, the ES was pretty much all on one screen. We had this trade right here, which we stopped out on. We're -10 on that. And we had this trade right here, which we had to break even on. So we ended up with -10 on the ES. And that was it. I don't see anything else that triggered during the break or anything. The ES does not give a lot of opportunity today. Not much opportunity at all. All right, the NQ, that is where we had the majority of our trades and the majority of our points today. So let's go back to the beginning of that. Okay, getting back there. I don't see any questions being typed in here, so I'm just gonna go through this quickly here and then, wow, there's a lot of bars here during the break. This is a 16 range, right? Hold on, let me try it this other way. Let's see if it goes back any faster this way. Because we have 2 minutes left before we start the live stream. So it's a lot of information to cram into 2 minutes. Anyway, on the NQ, we started out, our very first trade of the day was on the NQ. And we picked up 30 ticks on the very first trade. And then the one right after it picked up another 30 ticks. And then the one after that, we stopped out on. Then we picked up 8 ticks. Then we stopped out again. So at that point, we're at 28. Then we had another 30 tick trade that put us at 58. Then we had another stop out, put us back down to 38. And then we had a 30 tick trade that put us back up to 68. Then we had a 4 tick trade that put us at 72. Then another 4 tick trade that put us at 76. And that is how we ended it. I don't have time to scroll all the way back and show it all to you, but that's how we ended it with the NQ. We had 8 trades overall. 1, 2, 3, 4, 5, 6, 7, 8. Okay, we had more than 8 trades overall, but 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 trades overall in the NQ. So I got to fix that in here. This number right here on the NQ. So we had 8, we had 10, so this is a 19. All right, so anyway, if you have not taken a free trial with us and you want to take a free trial with us, go to mytradingiq.com right here and sign up for the free trial there. All right. All you have to do is click this button when you sign up for the free trial. Make sure you get your charting platform set up. If you can't do it yourself by watching the videos on the trading platforms page, just get in touch with us and we'll do it for you. Okay, you should take a look at the trade rules. These are the rules for all the trade setups. Every trade that we take, these rules apply. All right. All right, so I'm going to get into the live stream right now on TradingView, and hopefully you will all be able to join me out there. Hit refresh on this. Can anyone else install your indicators for you on your new TradingView computer is all set? Bart, all you have to do is go out here to trade rules, click on this right here, and it'll bring it up, and there's a button over here on the side that says copy. Just click on that word copy. Okay, and that'll do it for you. Okay, but yeah, get in touch with Val. She might be able to do it for you, help you out with that. Okay. All right, so let's go here, do this, this. All right, so you guys are looking at my screen right now, and let me hit start stream. And we are almost streaming live. Not quite. There we go. Now we're streaming live. So yeah, Bart, all you have to do is go here to trade rules, mytradingview.com trade rules. Click on this right here. When you click on that, it will bring up this right here. I'll save it, so I have everything that I've done today will be on it. Right? And just make sure I'm sharing it. I am. That's all you have to do. It'll bring up this chart right here. This URL, that chart. Okay. All right. So getting into the trading right now for the live stream in TradingView, we're going to be looking for a pullback here on gold. Just going sideways here on the Russell, we're going to be looking for a pullback on the ES, and we're in the middle of a pullback right now on the NQ. The NQ is actually, if it came out of the oversold right there, the NQ would have a long trade right now. I have things in the way of me taking a trade there. Okay. Yes, something else is preventing. There we go. There we go. All right. So now we're looking, we had a green arrow pullback right over here, but I wasn't really looking at the pullback. I was looking at the bar before the pullback. This one right here, that was actually a trade right there. Not any of it. I couldn't even get to my DOM to do that on time, but we'll wait for another pullback. On the gold or higher swing in place. Now, these are the rules, right? If you go here to mytradingiq.com, click on trade rules right here. These are the rules. So for every trade, all trades must come after a higher or lower swing, and all trades must be in the long-term trend direction. So there's no trend direction here right now. This is a higher swing. This is a higher swing. This is not a higher swing. There's no long-term trend direction. So we have no trade here on the gold and no trade here on the ES. Okay, no trade on the gold and no trade on the ES. Okay. All right. So now, let's see. Following the rules, right? Back here to the rules. All trades must come after a higher or lower swing, and they must be in the long-term trend. The only trend right now are gold right here and the ES right here. They're the only ones that have an A trend, so they're the only ones that have a possibility of a trade. Now I go, oops, I didn't mean to do that. If I go back out here, look in here. Anybody that's watching now, that's in the live stream that's watching right now, if you have any questions, you want to see anything other than the futures, just so you know, give me a symbol, and I'll go look at whatever you want to look at. Okay, just give me a symbol. Okay. Yeah. So the NQ is starting to get kind of bearish right up here. You see the outer bands, that's your long-term trend right here. They spread out and start going down, they're red, or just spread out and going down. Then your long-term trend is going to be bearish and start looking for trades there. See the ES right now is blue, spread out and going up. It's over here, baby. The blue and going up. So the long-term bullish trend right there. You want to grab a pullback on that long-term trend, right? When the price is going up less and coming down like this, you want to get in down here, goes up again, comes down again. You want to get in down here and sell it when it gets back up here. Okay, that's what we're looking for right now. Okay. Still no trend here on the NQ. You see this right here. It's starting to go down. It's starting to be bearish. It's just about there, just about bearish. This is flat right here. This is flat right here. You'll see. See how it goes here, okay? All right. So let me get the right kind of pointy thing here. We don't have any trades yet. We want to see the gold pull back. We want to see the ES pull back. And now the NQ is starting to give us a little bit of trend here. So you see these little moves right here, those leg lengths. Those are measured lengths. See how we didn't put in a lower swing right here? And because this is so jammed up tight right here, the ribbon is so close and squished up like that, the green just got into the black. So you're not going to have anything right there. Okay, you're not going to get anything on that one. Okay. All right. That's Ninja Trader. Look at that. All right, on TradingView right here, guys. All we need. See, this is just having the hardest time determining what direction it's going. If we look at the bigger picture here on markets from this morning, we were saying this morning that all the markets were kind of confused about what direction they should be going in. If we look at the NQ, it was having trouble right here with this ribbon. It kept going up to midpoint and down to the ribbon in the weekly trading zone at the same time. Turned to break here, it dropped all the way down through that to the zone down below, bounced right back off it, and now it's right back in the ribbon. To that right back in the ribbon, a total flat ribbon. So it's just a mess for trading today. That's on the NQ. If you look at these other ones, this is the ES. Now in the ES, when it started to look like it was going down, it had to get away from here where we had the ribbon and the weekly trading zone. If we're going to bounce down, the midpoint's down here, but now that it started to bounce up, the midpoint on the upside is right here. Right, so I'd look to get up to 1934. That's what I'd be looking for on that. Right. That's gold. Sorry, not the ES. That's gold. The ES did this ribbon. I mean, this mark right here on the midpoint is what we're looking for it to pull back to earlier today, and it ran right back up to it and through it after it hit the zone to the tick. The ES is looking like it probably wants to run up to this zone right here. It's going to make him the shot at that zone on the upside. We just got to get a trade set up for it. The Russell is all jammed out sideways right there. So is the NQ. These markets are just tough today. So that said, you just have to trade what's in front of you, right? And right now, the NQ is not giving us anything to work with. It's 109, so we have 21 minutes left in here for this session. Okay. Anybody that's watching in the live stream right now, if you have questions about anything, you want to see any of the symbol, stock, we're just happy here. But if you want to see stocks or ETFs, or cryptos, Forex, anything like that, just give me the symbol. And I'll be happy to show you how it works with anything like that. Okay. All right, so the NQ is once again making the shot at the downside right here. Now, let's blow this up a little bit so you can see. To really get down below there and make a shot, it's going to do what it's doing right here. Start to spread this out. So want to pull back. The ribbon will still be spread out a little bit. On a pullback, that ribbon will still be spread out a little bit. And when the black line down here gets into the overbought where it is right now, and we just hit the ribbon like we just did right there, now we need to down close off of there. Okay, so we've got a high on this bar. The high on this bar is right there. There's our green arrow. That is our first opportunity for a trade here on the NQ. Right, and here it is, right here. I'm short the NQ, and we have a 20-tick stop on that. All right. Now, the way it is set, it should go to break even automatically after it gets 8 ticks in profit, which we haven't gotten yet. I'm going to put my finger on the break even button just in case it doesn't, because that strategy hasn't been working as well today as it normally does. There it goes. Okay, so we're at break even right now on this, and now we have a 30-tick target on this as well. So what we anticipate out of this trade is that it's going to get all the way down here to the prior swing low. Now that 30-tick target is right there. Okay, so I'm going to go lock in a little profit on this, a little bit of profit on that. And we anticipate it's going to get below this level right here. That low is 41.25. All right, and it just took me out somewhere. I don't know if it took me out to the 30-tick target or profit, but I think it took me out with a little bit of profit on that. We did have the 30-tick target ready to go though. So that was the NQ. You're just waiting for the trade to set up, and you jump into it when you get it. All right, it should put in a lower swing right here, which it has not done yet, but it did get down exactly to this swing low, which is where I thought it was going to go. It needs to go through that, though, to continue the trend. All right, it just went through a tiny bit right there. It needs to go through it more to continue the trend. Oops, I didn't mean to do that. Sorry. Do that. All right, so let's look at these other markets right now and see what's going on. Right here on the 7 range, we want that to pull back and test the ribbon. On the ES7 range, we want that to pull back and test the ribbon. Okay, and we'll see how it goes. All right. All right. Now we are waiting. We're still waiting for a pullback here on the S and hold. The NQ should have put in a lower swing right here, which it really didn't do. And now it's just gone back to sideways. You see right here how the long-term trend, the outer bands, those long-term trends are just flat right there. So you don't want to trade when it's like this. You want to wait until you have something, some reason to trade it. Right? Separation in there, either bullish or bearish, and you can get into it. And right now, we don't have any of that. So I'll go back here and check this out again. That is this. I'll go back here. All right. Did somebody ask for any symbols? Nope. Nobody's asked for anything yet. Nobody's asked for anything yet. Well, if you do come up with anything, just gotta let me know. It is 1:14, so we have about 16 minutes left in here. And then we'll be able to take the trade if we get one. The NQ is actually going in the opposite direction right now. So you see when you have a trend change like this, where it's going from a short-term trend where we took that short over here a few minutes ago, where it's going from a short-term trend like we just had over here to a long-term trend, which we're showing right now. When it switches like that, I like to pull all the way back and touch the ribbon. I want to have an actual support level like this right here that it's going to bounce off of before I take the trade. So like right here, this should be a good long trade right here, all right? Because it had the green arrow off the ribbon. So we're in this right now, and the stop should go to break even after 8 ticks in profit. And there it is, stop to break even. And now we'll lock in a little bit of that, and it's got a 30-tick target on it, all right? So what we anticipate, it's already done what we anticipate. It's gotten up above the prior swing highs. And I'm just going to go back here, bring it back over. You can watch it some more. We'll lock in some more on that. And it's really choppy in here. So we end up with a profitable trade on that one too. Put that over here, that there. Okay, we did put in a higher swing. So if we pull back and hit the ribbon, or if the black line here gets into the oversold area, it will set up for another trade. It's not quite there yet. Right? It's not set up for another trade yet. It's close though. It's close. We want to see it pull back into the ribbon here. Okay. We want to see it pull back and touch the ribbon. We want to see it get into the oversold, but if it touches the ribbon, okay, now we got both. It's in the oversold and it's touching the ribbon. So if you add 4 1/4 points to the bottom of the bar, 52.50 up to 56.75, that is where you want to have your buy stop limit order waiting, like that. Okay. And I don't know if I did the math wrong on that, but but anyway, didn't I say 52.50? Should have been up to, is this on a 16 range? The 52.50 plus 4 should be 56.75. Why is that not? I got it. Hang on, let me do something here really quick. Okay, that makes more sense. All right. So far we had the short here and the long here. Now it's really choppy and sideways here. The long-term direction is really flat. All right, TradingView for some reason was just messing up with my chart right there, but it seems to be back on track right now. So we don't actually have a trade set up right here, right now. All right, over here on the gold, this, was it a direction change? Let's just look and see. Yeah, it was giving green arrows down. It gave a green arrow right here. So you could actually take this black arrow. I'm not going to. I'm going to wait for a deeper pullback on this. But because we already had one green arrow in this direction, that means it came back and it hit the ribbon. You can take any other kind of arrow if you want to. But I'm going to wait for the green arrow on the pullback right here. Okay. Let's go back here. We're already looking at that. Now we'll come back here and look at this and see, did anybody ask any questions yet? Nobody? Nope. Nobody's asked anything yet. All right. So now we have to wait a few more minutes here for another trade to set up. We're waiting for the ES to pull back deep enough, and I really want the gold to pull back deeper than it has. Okay. All right. Something is up with this. Just close this down. All right. So this is a pretty deep pullback here on the S, but still not deep enough. It's going to actually hit the ribbon or be oversold, and it's neither one of those at this point. Okay. All right. Again, anybody that's in here on the live stream, if you have any questions, type it in. If you want to see any other symbol, type it in. If you are not following us in TradingView and you want to be notified when we do live streams like this, you should start following us. However you do that on TradingView, start to follow us, and you'll be notified whenever we do a live stream. Right. So the gold is working its way up right here. I want to see it put in a higher swing and then pull back and hit the ribbon. The ES never pulled back deep enough to get a trade, and the NQ is just going sideways now. So far we've had a couple of trades on the NQ, both profitable, and now we're just waiting. It is 1:21, so we only have about 8.5 minutes left in this session. So if anybody wants to see anything else, excuse me, now just let me know. Okay, now it's time. Let me know. I keep clicking on the wrong thing. There it is. Okay, I'm back in this one. Does anybody want to see some like let's see what's not giving us a trade right now? First, let's look at Tesla. Okay, go to stocks, look at Tesla, and we'll look at that on, say, I don't know, 7 range. Each bar is only 7 cents on the 7 range. So if we look at a 50 range, and each bar is 50 cents for Tesla. Okay. When it loads up, you can see. You look at all the arrow is showing you where you should trade. Now Tesla is trading at $268 right now. So if you have a bunch of shares of it, this is some good money right here. Every one of those moves. Pretty much nailed the top on every one of those. Okay. We want to see a higher swing here on the gold now. All right, we want to see a higher swing on the ES too. And the NQ and Tesla now are just going sideways. I don't know. Yeah, we'll look on, change this to RTY again. Futures. We could look at other symbols like the YM if you want. I don't know if any of you guys out there like the YM, but this still looks like on the YM. Right, you're getting the same stuff. Now you have to adjust the sensitivity on the YM a little bit, but it is in here on trade rules. You know, for all the different charts, all the different markets that you would normally use, right here, ES, YM, Russell, crude oil, gold, the NQ, silver, ZBZ, NZF, and the euro. We have all those settings in there, but you can see it's right in here if you want. You have all the same information. Okay. Oh, the NQ is really going flat and sideways right now. Really don't have to go in there. To you, it's simple. Meal. Did you get it? Did you make it work? All right, change it to the RTY. The right one on that already. I want that one. Okay. It seems to be slowing down here. My internet and whatnot. All right. It's a stop symbol for it. But what is the symbol for it? You gotta give me something. TUS. All and see what happens. TUSIMPLE. At complex, huh? I don't. One bar. NASDAQ. Okay, price at. It is priced at $5. Okay, so even at $5, you can see it doesn't have a lot of volatility. I mean, this is like a month right here. So we're gonna have to. Yeah, so that's $1.83. We have to break that down to a much smaller time frame, like so each bar is now nickel. Okay, and you see how you got all the red in there because it's got the no trade zone. For a stock that is priced to this, you got to adjust the to make the no trade zone more effective. Okay, so we'll just get in here and I'll adjust that for you. Now it is set to 0.05 right now, but I'm going to try 0.005. See how that does. Okay, that's a little better. That's pretty close. I mean, you want to have it. You want to have the no trade zone showing flat. And the long-term direction is flat. That is when you want the no trade zone showing. So here it is right here. With that, you know, you'd be looking for the same stuff, Bart. You'd be looking for the pullback up to there. And you see how the outer bands are not really, they're not really around it right here for some reason. But you can see when they're red and going down, then that's fine. And when they're blue and going up, that's good also. That's all you really need. Okay. It's a dog of a stock. Oh, you can see right in here that on this morning, not this morning, 30th of June, this is since the 30th of June, it doesn't move all that much. You need to have volatility to get anything working. Yeah. But you can see the indicators working, did what they should have. Okay. Well, everything looks like it's working from this end. And it is 1:28. We have like a minute and a half left in here. Let me check back to the RTY. This one, Russell 2000. TYU. And we got to change the context back to 0.05 sensitivity. All right, the arrows are looking pretty good in there on a 5 range, but we're supposed to be 0.05 on a 7 range for the so that is, though, if you happen to be getting no trades, no indication from trades when you're at a larger time frame, you can just bump it down to a little smaller time frame. You get the indications where you're supposed to get, you get them more frequently. Like when I just went down to a 7 range, when I went from 7 to in the 7 range right here, it was put in and set 2 of them that were both. Okay. Just want to throw that out there for you. Having like a really flat period like we're having right here. But anyway, guys, we've run up. If you're in here and you're on the live stream and you haven't taken a free trial with us, go here to mytradingiq.com and right here at mytradingiq.com, right here, just sign up for the free trial, 9:11:30 Eastern Time. Click on that. We sent all the information you need to get into the room in the morning. Again, today, this is where we are right now on the month and on the year and all that. But in the room, this spreadsheet that we fill out goes back over 10 years. It's got our daily results going back over 10 years. And this was in the morning session today. We had 76.6 on the MQ. 8. Also, we lost 4 on gold. We lost 10 on the ES morning today. Yeah, this month has started off low, but every day is profitable and every day our goal. So where you want to be on the year. All right. Again, if you haven't taken a free trial with us and you want to, go to mytradingiq and sign up for the free there on the home page, right here on the home page. Okay. All right. I'll shut down the live stream now, and I will pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I'm ready. Good job. Recap of the recap for the morning session.
Today, 1 minute, 1 trade, $1,050.
What a great way to start the week. Good job.
Yes, it was a nice start. All right. Thanks, everyone.
All right.
See you tomorrow.
All right, guys. It's time, before we continue the recap, for our tweet of the day. Now, we don't make the news. We just share it with you. And because we believe in equal time, we try to do 1 tweet of the day from the left side of the aisle and 1 tweet of the day from the right side of the aisle. I don't know that this has anything to do with politics. It's just what it is. Travis and Flint, you're the winner again. This guy is on top of things. Just in, according to researchers with the Burn Unit in Australia, COVID and COVID vaccines are causing a rise in Stevens-Johnson syndrome, a rare and potentially fatal skin disorder. Researchers have seen cases increase 7 times the normal, and every single patient has had COVID or the COVID vaccine. The researchers say it's hard to directly link the two, but are very alarmed by the rapid rise since the pandemic. Of the cases, the vaccinated patients' peak flare-up happened at 7 and 28 days after vaccination, consistent with a theory that the vaccine directly binds with cell receptors, causing a flare-up. Why did we push these vaccines on people before they were properly studied? And, of course, you can, you click here. You can see the whole thing. And many comments, some agreeing, some disagreeing. We're not agreeing or disagreeing because we don't know anything about any of this. But I found it interesting and I thought you should know. And that's why it was the tweet of the day. Okay, with that out of the way, we go back to where we were. Now, for anybody that tuned in late, I encourage you to grab a screenshot of last night's CTAs. Here's another shot. Okay, we've already dissected the daily chart. If you missed that part, about an hour after the broadcast ends, you can go to youtube.com/CFRN, where we will have archived today's broadcast, along with the 2,200 plus other daily live broadcasts that we've archived. We're probably over 2,300 now. I need to go in and check, update. So got your screenshot, whatever markets you trade. Okay. Now, keep in mind that all of our members and trial members had this information last night at 6:20 p.m. Eastern. Okay. So the market opened here, below the BBC, below red and falling. Both indications that we anticipate lower prices. And price came right down to the target at 44.24. Consolidated for a bit. Now remember, these are last week's zones because all alerts that go out on Sunday night are based on last week's zones. Any alerts that go out today and the rest of the week will of course be based on this week's zones, which were published Monday morning, today, 6:15 a.m. Eastern. So on tomorrow's broadcast, you will see this week's zones. Right now you're looking at last week's zones, but this makes a great point. Okay, even though this was last week's zone, that's what you call the power of the carryover. Okay, important prices, important areas are almost always tested. So we didn't quite make it to this zone. The low was 44.11 and a quarter. Is that the low? Yep. Okay, and the zone's 44.0809. But again, last week's zones. But even though this was last week's zone, you can see to the tick. Then price gets back below the BBC and hits the short target. Now we've got red and falling. Okay, as price is climbing, you want price, step line, blue and climbing. Once the step line crosses blue and climbing, you're probably going to see a pullback to the BBC. Price always reverts to the mean. So I would look for price to come down, and if it finds support at the BBC, then we may catch another leg to the upside. If it doesn't find support, then this low right here of this candle and the target are potential support. Then you've got potential support here and here. And of course, members and trial members already have this week's zones. On the Dow, here's where we opened last night. Just like on the ES, we're below the BBC, so we expect lower prices. We have red and falling, so we expect lower prices. And we dropped right to the target. Caught a little bounce, dropped to the target again, caught a little bounce, dropped through the target. And then at the London Open, we dropped to the low of the 2 a.m. candle. London opens at 3 a.m. Eastern. Okay. And so after 30 minutes of London trading, we get back to the BBC. Now, as I've said, the pullback holds more often than not, like it did here. Okay. However, eventually, we know that price will trade through the BBC. That, of course, keeps the market fluid and tradable. So we got a leg up, which was plenty of room to get your goal for the day if you didn't get it over here. We pull back to the BBC, the pullback holds, and off we go all the way to the target. So we hit the short target and we hit the long target. We take out the high of this candle right here. Then we very well may find resistance at target overhead, last week's zone, and these swing highs right here on the Russell. Again, the vertical line separates today from Friday, from Thursday. Okay, price drops to a zone, we expect support. We rally up to a zone, we expect resistance. So we opened last night below the BBC, red and falling, just like the ES, just like the Dow. And we came down and we hit the target to the tick. Then we get above the BBC. Now we're anticipating higher prices. But we know we have an obstacle overhead, the weekly zone. Remember, we expect resistance when we rally up to a zone. So that resistance sent the market looking for support. Pull back to the BBC holds more often than not. And off we go like a rocket ship, zone to zone. Takes us right through the target. Okay? Now we've been consolidating for quite a few hours from zone to zone, back to the zone, now back up to the zone. So, go 1, 2, 3, 4, 5, 6, 7. So about 4 hours we've been consolidating between these two zones from last week. On the NQ, same thing as the three markets we've already looked at. The indices will typically look the same. And that noise you hear in the background are the construction workers in the ceiling over my head trying to get my AC unit air handler installed. The unit goes outside, but the air handler goes up in the attic. And so, below the BBC with red and falling, we expect lower prices. First time we hit the zone, we bounced, found resistance at the step line. This took us through. Now, I told you only three things happen at a zone. The most common is consolidation, 70% of the time. Rejection, 20% of the time. This is rejection. See, this was a red candle all the way down, but by the time the 30-minute period was up, the only thing left touching the zone was the wick. That's rejection. So, consolidation, 70% of the time. Rejection, 20% of the time. 10% of the time, the slice. That's when a candle slices through the zone on your 30-minute chart like it's not even there. When the slice runs out of steam, price will typically retrace to the zone it sliced through and then continue in the direction of the slice, which is exactly what happened. So we hit the target. When the market finds support, it goes and looks for resistance. BBC, pullback holds more often than not. Then we pull back. Basically to blue and climbing. Didn't quite touch it. But that represents support. So when you're below the BBC and you have blue and climbing, you don't short there. Okay? You want to be below the BBC and have red and falling in order to short. Okay? So we go up. This candle slices, pulls back, continues in the direction of the slice, pulls back to the zone, finds support, and then right here, this is the 30-minute opening candle on Wall Street. I personally don't do anything, no alerts, no trades, no nothing. during the first 30 minutes of the Wall Street Open. That's just my own personal preference. Michael and Valerie, they trade right at the opening bell, but futures trade around the clock. So I just stay away from that first 30 minutes of incredible volatility because I like to be able to use aggressive risk management. So you, over time, will decide what works best for you. So we're up to the zone, back down to the target, up to the zone, back down to the target. Back up to the zone where we sit right now. We're above the BBC, got red and falling below us. All these wicks to the upside. See, the market has repeatedly tried to go higher. And if it were to manage to take out this high, right here where you have this bearish cross, that would be potential resistance. This would be potential resistance. And then the target. Okay. All right, that covers all the indices. Crude oil, we haven't hit either target. We opened with resistance overhead and support below. We hit that resistance, it pushed us down to the BBC where we consolidated. We got a little bit below, then a little bit above, then a little bit below. Those are trading conditions you want to stay away from. Okay? Price needs to truly pull away. Like here, we know it's truly pulled away. So this candle opened at 73.66 and ran up $360 plus to the zone. Then we pulled back and got below the BBC. Now we have red and falling. Red and falling. Prices below the BBC. So what do we expect? Lower prices. Where would we expect support? Well, this bullish cross is right where the target is. So that window of opportunity is pretty self-explanatory if you understand the concept that this is potential support. Okay. Now, if that support gets broken, then of course, members and trial members have the new weekly zones already, so they know how to handle that. Gold opened here, ran right up to the zone, found resistance, pulled back to the BBC, made another run of the zone, and it got below the BBC and it dropped to the target. So we hit the target, pull back to the BBC, hit the target again, traded through the target. Okay. Now this low right here is a direct reflection of this bullish cross. What I just explained to you on the crude chart. If price gets down, if price starts to drop, that bullish cross is potential support. On gold, as price dropped, see this bullish cross? Support to the tick. In fact, sometimes it'll give it a bounce, other times it'll create a reversal, which it did here. Fluid and climbing, almost back up to the zone. Okay. All right. Silver. We opened here. Price is trapped between support and resistance. We spiked the zone and quickly reverse. Now, if you'll look, Friday's high became last night's high. Now, this high is a direct reflection of this bearish cross. People will tell you that support and resistance is horse and buggy and blah, blah, blah. That's because they have lots of expensive algorithms and indicators and oscillators and other things to sell you. We don't. We have a very simple set of indicators. When you become a passport holder, a lifetime member, with no recurring fees, no upsells, no nonsense, not ever. You own the indicator set for life. You have lifetime access to the zones. You have lifetime access to every resource that we offer. And once you become a passport holder, you never spend another dime. Not with us. You can still go buy stuff from other people if you want to, but everything you need is included. So, oh, and there's also unlimited one-on-one private mentoring for passport holders. And around-the-clock support via our Telegram client. So price is pushing. Where was it likely to find resistance? Well, we found resistance here and here, based off a bearish cross here. Okay. So if we're able to take out this high and this high, then you only need 2 pennies in silver to reach your goal for the day. So 23.44 to 23.46, that would be your goal for the day. Or you could do something like 23.40 to 23.46. That's 6 pennies. If 2 pennies is $100, that's a $300 per contract move. And yes, we hit the short target. And see this bullish cross here? See this low here? Over and over, again and again, day after day. You don't have to wake up every day and wonder, how am I going to trade today? Is it a fast day, a slow day, a quiet day, an up day, a down day? We trade the same way every day, no matter what. Euro. Market opened, trapped between resistance and support. Got through the BBC, but we knew we had an obstacle here. Weekly trading zone. Remember, when price drops to a zone, we expect support. When price rallies to a zone, we expect resistance. Now, the zones you're looking at, I've already told you they're last week's zones, but I really want you to comprehend. The zones you're looking at were published last Monday morning. Not this morning, but last Monday morning at 6:15 a.m. Eastern. Now, once the zones are published, they're carved in stone for the entire week. We've published the zones since December 14th of 2009. It's about 13 years of data. So how has that data changed since we first rolled out the weekly zones? It hasn't. It's based on the underlying principle of how markets operate. Those underlying principles have been in existence since the inception of the markets and will remain in existence until the markets cease to exist. How can I be so sure of that? Because that's how markets work. And we'll teach you. So the market drops to the zone, finds support, gets above the BBC. Now you'll notice this swing high. It's Friday's high. Horse and buggy, right? And then back to the zone, support again. Then we get above. Then we have a candle open above. And boom, right up to the long target. And it looks like we might have hit the zone to the tick. Nope, we missed it by 1 tick so far. 355/360 is the zone. And and the high was 350. And that brings us back around to the daily. Okay, we have a doji. We got resistance times 2 overhead. We've got support at the low of the day. First the VBC, then the low of the day. And then this low here put in on June 26th. And then this low put in on June 8th. And then that would bring us to the 24% Fibonacci retracement from the October 13th low of last year to the most recent swing high, June 30th of this year. Price always reverts to the mean, whether it's on the daily chart or the 30-minute chart, whether it's on the S&P or crude or gold, Amazon, Walmart, Bitcoin, British pound, Spider. Now, you're seeing and hearing things that you may not have seen and heard before. Wow, I could never learn all that stuff. Trust me, the 2 hours of live training every trading day. What you've seen is everything. Nobody's going to spring something new on you tomorrow. You trade the same way every day under all market conditions. And when market conditions aren't suitable for trading, then we do the smart thing and we don't trade. 9 out of 10 new traders fail because they don't have a teacher. Hold on for me 1 second, guys. Sorry, guys. I had to take that call. All right, but we're done, pretty much, except for a good word for the day. Not when traders fail because they don't have a teacher, so we give you a teacher every hour, every trading day for 2 hours, 9:30 a.m. to 11:30 a.m. Eastern. You work a day job, and we'll work out a way for you to still get your training. When you become a passport holder, it's your all-access pass to everything we do, everything we've ever done, and whatever we do in the future. In other words, once you become a passport holder, no matter what we do in the future, you don't spend another dime. The strategy you learn is fluid across all markets and all time frames. And once you learn how to trade, nobody can ever take that away from you. And as a passport holder, you own the indicator set for life. Plus, you'll receive the Logic 247 alerts and the concierge trade alerts for life. There's no fine print. Everything a trader needs, all under one roof, one low price. No upsells, no recurring fees, no nonsense, ever. All right, good word for the day. Last week we started talking about, are you flourishing? God doesn't want us to just survive. Sometimes you ask somebody, hey, how you doing? Ah, man, I'm hanging in there. Ah, man, I'm getting by. Well, God actually wants us to thrive, not just survive. John 12:25. The one who loves his life will lose it, and the one who hates his life in this world will keep it for eternal life. Here are 2 more areas in which God created you to flourish. Number 1 is in your relationships. Relationally, your languishing self is often troubled. You're undisciplined in what you say, sometimes reverting to sarcasm, gossip, and flattery. Isolate, dominate, you attack, you withdraw. Whereas your flourishing self seeks to bless others. They energize you. You're able to disclose your thoughts and feelings in a way that invites openness in them. You're quick to admit your own mistakes and to freely forgive others. Number 2, your experiences. God grows you because he wants to use you in his plan to redeem his world. That's why you find him changing your experiences. Your flourishing self has the desire to contribute. You live with a sense of calling. Indeed, your inner longing to become all you were meant to be is just a tiny echo of God's longing to begin the new creation. The rabbis spoke of this as tikkun olam, or to repair the world. Focused on yourself, your life is as small as a grain of wheat. Given to God, however, it's as if that grain is planted in rich soil, growing into part of a much bigger project. In John 12:24, Jesus said, "Truly I tell you, unless a grain of wheat falls to the ground and dies, it remains by itself. But if it dies, it produces much fruit. The one who loves his life will lose it, and the one who hates his life in this world will keep it for eternity." And that's a very long time. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN E-mini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen